This is the rent the home strategy. Now, this is based on the IRS allowing us to rent our home, right? That's either rented or purchased home for up to 14 days, completely tax-free. Now, when we're looking at the interpretation of this of the tax code, it doesn't say anything about renting to corporations or renting to other individuals. It just says you have to rent your home. So what we're going to do then is looking at the rent the home strategy is going to allow you to have a monthly meeting in your home, right, or apartment if you rent, that's okay. We're going to rent your home to your business, right? So essentially what we're doing is we're creating a separate entity, the separate entity of the S corporation from you personally, and by renting your home for a monthly meeting is going to allow you to shift money from your corporation to you tax-free. Let me talk about this a little bit more. So what are we going to be doing? We're essentially going to be shifting money from the corporation to you individually. So let me do that. So your corporation rents your home. So how do we do that essentially? Well, all we have to do is have a reason for having a monthly meeting, right? What's a good reason for having a monthly meeting? Well, pretty much anything, right? Every business has what's going on this month, what happened last month, what's happening next month. It needs to plan things, strategize, and review what has happened and consider strategies for what will happen in the future. So what we're going to be doing is use this template that I have here for this monthly meeting agenda. Feel free to change it. Use another one. I'm going to try to give you a couple different options there so you can find one that works best for you. But what we really want to do is have a substantial meeting, right? What is a substantial meeting? At least 1 hour, right? And have at least 2 people there if you can. Really what we're doing is we're just recapping what's happening this month, what happened last month, what's going to happen next month with your business, right? And usually with businesses, we'd like to have some sort of conference room or quiet space to be able to do this. So that's where the rent the home strategy comes into play, because as a business owner, you have the choice of going to many different options, right? So you can go to a Hilton or a Hyatt or a country club somewhere, and then you're going to find rates anywhere from $500 to $1,000 per day, per 4 hours, depending on how they're going to want to actually rent this out to you, right? So what you want to do is find the market value, and that can be anything from calling a Hilton or a Hyatt and saying, hey, we need a conference room for 4 people for 4 hours. How much does that cost? And then you want to get some sort of bid, some sort of paperwork. And I'm going to have a couple things that you can look at here in the documents here, so you can look at exactly what we're going to be looking for and exactly what the IRS is going to want you to have to prove that you actually did some sort of research into the price. Right? So what you're going to find is, on average, anywhere from $500 to $1,000. So let me put that here. Okay. And what are you renting, essentially? Well, you're renting a conference room to have a business meeting, right? A monthly business meeting. Where you choose to have that conference room is up to you. So contact the Hilton, the Hyatt, the country club, whoever you want to contact, get their prices anywhere from $500 to $1,000 for that 4 hours conference room for 4 people. And then what you're going to do is decide, well, no, we're not going to go with someone else. We have this really great conference room right here. It's actually my dining room table, and it has four seats. Right? We have 4 people. At most, it could come, or we've invited 4 people, but only two people came. Or 2 people were on conference call, right? They were on the phone as we just had it on speaker while we were doing the meeting. So what we're going to be doing is paying. The corporation is going to pay you, right? The corporation rents your home instead of somewhere else, right? So we need to get an idea of the market rate of somewhere else that it costs, right, between $500 and $1,000 per 4 hours for a conference room for 4 people. But instead of going to that conference room, instead of renting their conference room at the Hilton, the Hyatt, the Country Club, whatever, we're going to use your home. And again, remember, you don't have to own the home. This isn't playing with depreciation or anything. This is strictly for rent, right? So what happens then is your corporation rents. So your corporation gets a deduction. So this is the deduction. They're going to deduct that $500 or $1,000 for that day for rent, and you can do this up to 14 times per year. Right? So that would actually give you monthly meetings between January and December, and you can also do a semi-annual meeting, and you can also do an annual meeting. Right? So that actually give you 14 times a year. Now, if you want to go aggressive and take the $1,000 per day for 4 hours for the conference room, market rate, you can essentially get 14 times $1,000 or $14,000 completely tax-free, right? How does this work? Why does this work? It's because the IRS allows you to rent your home up to 14 days a year completely tax-free. Now you have to have the S corporation to do this. This will not work with an LLC. It will not work with a sole proprietorship. You must have that separate legal distinction of a corporation to be able to do this. I guess you could probably try on an LLC, but I prefer to see that corporation, right? All right. So when you're doing this, to make sure that you have all your I's dotted and T's crossed, and you have all the paperwork and all the formalities done, make sure you get the market rate. That's this guy right here, the market rate. Make sure you get an invoice or a quote or something from a reputable conference center, right? Like a Country Club or a Hyatt or a Marriott, something like that, that has a conference room that you can rent. So make sure you get the market rate. Make sure that you paid from the corporation to you personally. Make sure there's a check involved, right? So there should be a check. Make sure you have a check payment so that you can actually see the money that's being transferred from your corporation to you personally, right? Your home, that means you can write the check to you personally, right? How much do you want to take is up to you. 500 to 1,000 based on the market rate. Again, based on your level of aggressiveness as well. If you want to be more aggressive and get $14,000 a year tax-free, then do the $1,000. If you want to dial it back a little bit, be a little bit on the more conservative side, that's okay. No problem at all. Just choose the 500 or do it less frequently than the 14 times. Can you go back and backdate this? If you wanted to, you could, because essentially we just need to have this reported on the tax return showing that the corporation paid some amount of rent. Now be careful, don't get too crazy with this. You don't want to have your rent too high on your tax return, because if you do, it could trigger an audit, because rent is one of those things that they are looking at. Usually, more than likely, is one of those things that can raise a red flag if you have too much rent. So don't go too crazy with this, especially if you're paying rent to someone else. Let's say you're a chiropractor and you're paying rent, and you're paying a couple $1,000s a month on rent. So make sure that all your numbers are aligned and you don't get too crazy with this. So if you want to be more on the conservative side, that is more than okay. All right, so rent the home strategy. What we're doing, corporation renting your home for the market rate of $500 to $1,000. Make sure you do a monthly check payment for this. If you don't have the check payment, it never happened. So make sure you do your check payment. Use the templates that we have here available to record your monthly meeting, and make sure you have everyone that attended to sign off on the monthly meetings, just so you have all your paperwork taken care of and handled, just in case you get audited on this.